Welcome to Gagliardi's Got Real Estate podcast, hosted by myself, Gerald, Sabri, and Rocky Gagliardi. We look forward to bringing you something fresh, something new the Goulburn Valley hasn't seen before, more informative information. We've got special guests, hot topics. Make sure you follow on your preferred podcast platform, GSRE socials. We hope you enjoy this episode. G'day guys, Gerald Sabri here, and welcome to our third edition of our GSRE podcast. With me is Sean Reedy from the office, and we're delighted to have some guests in the broker field, local brokers here in Shepparton, to touch on all things finance, what's changed, new legislations, what the market's doing out there at the moment. So welcome to Paul Mazzella from the Brokerhouse and Simon Quattrocchi from GV Finance Brokers. So welcome guys.
No problem, thank you.
Thanks, Gerald.
Just start with just a little bit about yourselves for our viewers. Paul, if you'd like to start.
Yeah, Brokerhouse. We've been around for 25 years now. All things finance, from commercial, business loans, personal, car loans, home and investment loans.
Yep, good. And Simon?
Yeah, Simon from GV Finance Brokers. Established business 21 years ago. Very similar, all things finance, from home loans, commercial, equipment finance, personal loans, investments.
So, everything covered.
Everything covered.
Yep, and workload and so forth at the moment, if you guys are fairly busy?
Oh, it hasn't slowed down.
Yep.
Certainly hasn't slowed down.
Yep. The main topic at the moment, I suppose, is what we're seeing is interest rate rises have continued since, I think it was May last year, so that it doesn't really look like slowing at this stage, but it might be a touch. But what's your general thoughts and what are you seeing at the moment?
With the inquiry level at the moment, it's certainly it's consistent, hasn't slowed down. We're getting more inquiries, obviously people wanting to reduce rates. It's not uncommon for rates to an existing client of a bank's rate, they won't drop their rate, so they really have to refinance out to try to get a lower rate. So that's probably a common thing at the moment. What's making it as hard, though, is obviously rates have gone up so quick. I think today might make it the 10th time that rates have gone up. It's making the serviceability of clients a little bit harder to try to get finance. So to swap banks is a little bit harder as well.
Yeah. And Simon?
Yeah, you'll find since the 10th rise, you'll find that borrowing capacity could have easily decreased $250,000, $300,000. So it's quite a significant amount. So even for people looking to refinance, may find it difficult to just refinance because they don't have the capacity anymore. But we are, and probably like yourself, we're actively looking at our current clients and seeing if we can actually price them up and get them into a cheaper rate anyway.
That's interesting because not a lot of clients would actually realise that. Is that what you're finding?
And even for us to go back to their existing lender and actually ask for a discount. So it might not be changing banks, but we can certainly try to reprice it internally within their own bank. So it's certainly worth reaching out either straight to your own bank or to ourselves, and we can try to reduce the rate. Because every 0.25 or 0.5% is going to help.
Impact.
It all helps.
One key thing I'd like to talk about is for our market too locally is more on first homeowners. I think it's a big asset, a big key for Shepparton and Goulburn Valley for young people to get into the market, and obviously it's been a lot harder of late, and we've certainly noticed that across our sector in real estate. What are some of the benefits and the process for first home buyers that you guys are running through with them?
The initial appointment is probably the first step, and in regards to that, we will always do our fact find to collect their information and get an idea of their actual financial position. Now, sometimes they're ready and they've done their homework and they know what they need to do, or sometimes we'll actually go through the process to help prepare them. So we've got clients that we might have seen 3 months or 6 months ago and just explain, if you want to get to this position, this is what you need to save. This is maybe you need to focus on maybe getting rid of this credit card, buy now, pay laters. Very focused on trying to get rid of those and help get them prepared for that position. So, and the focus is to actually get them pre-approved because we don't want them to just go and buy a property and then focus on their finance. We want to get them ready so that they're prepared. They've got their pre-approved. When we get a call from an agent like yourself, we can say yes, they're pre-approved. They're right to this limit.
And how long does that pre-approval last? Not just the first home buyer, but client in general. Does it vary from?
Do you want to answer that one?
Look, it's usually 3 to 6 months, but
Yes, but
that can be reassessed
Yep.
at any time. So when they get a contract of sale, they find a house,
Yep.
the actual application may have to be reassessed. And if the assessment rate's changed, so the rates have gone up again,
Yep.
it'll be reassessed at the higher rate.
Yep.
So it's a big variable between lenders with what some of them actually do. So it's a pretty broad sort of question.
Yeah.
But a lot of the major banks
a solid 90 days.
usually have it
90 days.
90 days.
Yeah.
And I think as an agent, like, it's really important that we love when clients deal with local brokers, because, you know, we trust, you know, how you guys deal with things and things like that. So for us to call you guys up and say, you know, how's this client looking, you'll say straight away, yep, they've got no issues. Where, as you said, you know, it can change any day in terms of getting it revalued. That's when it become a bit sticky to a degree. Yeah.
So I think Simon's right. So the big key is with anyone trying to borrow is we'll obviously go through a fact find with them, which is trying to work out just a little bit about themselves, what they've got, income, savings, liabilities, and then just try to paint a bit of a picture of which way they can go and what they can borrow up to. Ultimately, with things with prices going up so much and stuff like that, expectations now may have to change a little bit.
Yeah.
But certainly we can sort of help them try to reach their goals too. You know, and if it means saving a little bit more or paying out of debt, that can certainly change borrowing capacity.
The other thing is, even if they've got a pre-approval that might have expired, we have direct access to the lender's capacity calculators, either it's online or an Excel. So generally we'll ask them to provide us with some updated pay slips, just ask to make sure that no other financial positions changed or circumstances are changed. So if the client comes in and say, look, I found something, but it's another $20,000, well, we can quickly enter that data because it's all saved. And it's fairly accurate, so we can go, yeah, looks like they've got the room to go that little bit extra. We've checked their savings, everything fits, we'll be right to go. Even though that pre-approval might have expired on the assessment side of things, generally we can just still update that information and move it forward. But the assessment would be based on the new information.
And turnaround time for, you're talking only a week or two, if that, once you've got all the information?
Oh yeah, that can be quite quick. Quite quick. Yeah. We're talking the assessment itself only can take 2 to 3 days, depending on the lender. What can delay it is sometimes we've waited weeks for contracts, valuation delays. I've had circumstances where we've been waiting so long for a contract that the client's actually gone and bought another property and settled on it, and the contract's arrived and so, hold on, what's going on here? So contracts, vendors getting their contracts out is quite important. Don't delay.
Absolutely.
It's all about the communication.
It's certainly the slow bit is getting the contract. Because it delays the valuation and so forth.
Oh, definitely.
And that stems back to, I suppose, us as agents being diligent with your vendors, getting your 32s and contracts prepared early. You get them signed in a timely manner, it's off to the broker as such. And
keep the process going.
And time frames around finance approval, what are you seeing changes there from when you actually have received a contract? And explain to the viewers, obviously we know the contract is the main part before finance can be approved and valuation, but I think that's something that some of our viewers may need to be enlightened on.
Receiving the contract can take it from being a pre-approval to then officially moving into the approval stage. So they do some banks will do a further assessment on it, but it's certainly the turnaround times from actually getting the contract, depending on the valuer. Valuers might take 2 days, might be 5 days. They might not be able to get into the house to value, so it might be someone that's renting the house that can't get let the valuer in straight away. But usually it's a week after you get the contract and the valuation comes back that you should have a full approval of some sort.
Pretty quick still, even though in our climate, interest rates and whatever's happening in the market, it's still turnaround time. You know, you're working off 14 days, sometimes 21 days is normal.
Usually achieve the 14.
The bank turnaround time's pretty quick. So usually allow 3 weeks and you're pretty right. It's more the prep work we do behind the scenes of collecting all the information, going through the statements, double checking everything. That is, it's important to go through all that process from our side because we don't want to. Our objective is to try and put an application in and trying to get it from start to finish as cleanly as possible. Not oops, I didn't realise that, or you missed anything. There is time that we take to make sure that we get everything right.
So ultimately, getting back to the fact find, be very honest when you're completing it.
Yes.
declare all your debts, all that sort of stuff.
Yep.
And
Yes.
it should go through fairly seamless.
It's when
And
they're
being
not-
a broker, it gives
yeah.
us all the options. So if, for argument's sake, someone had a default, right, and they don't like to talk about it, but if
Yeah.
we know about it, we know which banks to go to first that'll accept that.
Yeah.
So it makes the process quicker
Correct. Yeah.
and a little bit more seamless for them.
Yeah, you got to be very honest when you do the
Yeah.
fact finder. Yeah.
The banks will certainly do credit checks, so it's going
Oh,
to come up. So
definitely.
you may as well tell us straight up
Yeah.
Yep.
that something's there.
Yeah.
And there's circumstances where clients don't understand a dental loan is an actual loan, or solar loans, or buy now, pay laters. They're actual commitments, but they've perceived it as not a commitment. Or credit
Yeah.
cards. Amazingly, how people think credit cards are not an actual commitment.
Yeah.
So those,
What the big thing is with credit cards is if they've got a limit of $5,000 and they owe zero,
Yeah.
they don't think they have to actually put it down.
Yeah.
But it's there. The banks work off the limit because you
Yeah.
can actually draw the money back out.
Yep.
And then to give you a basic scenario, if you've got a $1,000 afterpay card,
yep.
that can change your borrowing capacity by $5,000.
Yeah.
Right. So if you've got a $5,000 limit on a credit card,
Yep.
there's $25,000.
25. Yeah.
So
Yeah.
a lot of people have got $5,000 or $10,000 credit card.
Yeah.
Yep.
Could be up to 50 grand in regards to what they're restricted by with their borrowing. So it's a lot.
Yeah.
And buy now, pay laters are actually calculated 3 times the rate of a credit card in general.
Really?
So, yeah. So,
And that's
roughly.
more common. You're seeing more
Oh, heaps.
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 Yeah.
Might be
A lot of
very
people.
common.
Yeah.
Yeah.
Yeah. That's good information. That's good key points for people to understand and know when they're prepped to go in to see a broker, to get the pre-approval, just to be upfront and honest, to make the whole process a lot easier.
Yep.
But just on some first home buyer government grants and assistance, can you just touch on what's available at the moment for first home buyers for established housing? And,
I can.
yeah.
You've when you can touch on it as well. So you have the. They keep changing all the names. So you got the regional grant, which is the 5% deposit.
Yep.
Scheme. You still have the family guarantee, which is the 2% deposit. You have the new building grant, which is 5%. But that one's a little trickier because you've got to have the house and land packaged together.
Yep.
That can be and the. What do they call it? First buyer's grant, which is meant to be for the city, but still can apply for regional as well.
Yep.
Key things to know on the 5% is the 5% just cannot be 5% handed to you. It actually has to be a 5% genuinely saved amount of money.
Yep.
So it cannot be bulk money or money from your parents or anything like that. You actually have to save it.
Yep.
And we don't have rental mitigation or anything like that. So it's very
right.
strict around the rules.
Yep.
And it's for citizens only, which is a little bit hard for permanent residents as well, which is a bit sad, but that's how it applies.
Yeah.
Did you want to add anything to that?
On top of that, nil stamp duty up to 600,000 for first home owners regionally.
Yep.
It is different metro.
Yes.
So, but Shepparton's up to 600,000 nil, and then it's tiered after that. So, whereas stamp duty on a $600,000 property might be about 30,000. If you buy something for 610, they might only charge you $2,000 for that extra 10 grand.
Yeah, okay.
So it's tiered up, which
That's
is a
good to
huge bonus.
Yeah.
Construction still 10,000.
Yep.
So obviously there's nil
Yep.
stamp duty when they buy the land for a first homeowner, and they get 10 grand towards the construction.
Yeah.
Some of the things that they need for a lot of these grants, they need their 2022 notice of assessments available,
Yep. Full ID.
full ID, Medicare card, and obviously the 5% genuine savings for the
Yep. For the grant itself.
for the grant itself.
Yeah, and there's just a couple of stat decks you've got to do, confirm that you haven't bought anywhere, but that's pretty easy.
Yeah.
There's nothing complicated about those. Just with the new family grant, it is not necessarily for first home buyers. So it could be for a single parent with a child that's come out of a relationship, has some funds, and they want to get into into a home.
Yep.
They'll still have stamp duty, but that 2% is a big help, and the fact they don't have to pay any. Well, that's the big thing. Lenders' mortgage insurance is waived
Yeah.
as well, so you
Yeah.
don't have to worry about lenders' mortgage insurance. So huge difference.
Huge government incentives.
Huge
Yep.
government, and
Yeah.
and to the bank as well. It puts it from it's still a 95% lend,
Yep.
but they're actually giving you a lower rate as an 80% lend rate,
Yep.
interest rate. So some of the rates can be different too.
Yeah,
So
right.
it's a huge
Yeah.
benefit for the first homeowner.
Yeah.
There's a lot of really good grants for them. They're great.
Yeah.
And a lot of people are taking it up. There's so many offers released from the government to do this, but I think it's slowed down a little bit in regards to the first homeowners market, so they are available.
Yeah.
But that's one of the best grants that's been released in the last 3 years.
Yeah.
Yeah, it's been brilliant.
And where do they find that information? And you guys
From us.
hold a hand through that?
Yep,
Go through
sure
the whole
do.
process from start to finish?
Yep.
Yep. Fantastic. Banks at the moment, major banks, big four banks, where there's a lot in that space going on. You guys as brokers have got the flexibility to use a lot of different banks. What are some of the benefits of a client using you guys as brokers in lieu of one of the major banks?
It's about understanding the policy of the banks, because every client is very different from the next client that walks through the door.
Yep.
And that can come down to being self-employed, being casual, being part-time, being full-time. So you have to actually understand the type of employment.
Yeah.
So that policy is very different for every single different bank.
Yep.
So it's very, very important to understand how they apply policy.
Yep.
Where some banks, for example, casual, some banks will just amortise the last 6 months to get a year-to-date figure. Some banks will rely on what they earned in the previous year for their casual income and maybe work off that figure.
Yep.
So you might have earned more this year, but you've earned less the previous year, so they'll only work on the lower figure. So if that doesn't work for that bank, you've got to take them to the correct bank.
Yep.
So it's a matter of understanding the client's position. That's where it comes down to.
Yeah.
That fact find, very, very important,
Yeah.
because that helps us place us to the correct
Yep.
lender.
Yep. Yep.
Yeah, it's certainly policy is the big difference.
Yeah.
We've got over 40 different lenders now, so there's a lot of lenders out there.
Yeah.
Yeah.
And policy plays a big part. So
Yeah.
interest rate's not everything.
Yeah.
You know, there's some really good interest rates out there, but it doesn't mean that particular bank does
Suit
what
you.
you need to do
Yeah.
and it suit that individual. So, yeah, Simon's right. You know, there's certain banks that help out, look after casual employment better. Some banks that look after self-employed better.
Yeah.
They're all different. Bank A might also, you know, if you're looking at a particular house and your own bank can't lend what you want, Bank B might actually lend you the money.
Yeah.
Believe it or not,
Yep.
Bank A might lend you 500 grand and Bank B might lend you 540
Yeah.
Yeah.
on the same income, and it's just how they look at it and how they assess it.
Yep.
So that's probably the big difference between a broker and then going straight to your bank.
Yeah.
We may have
You're
more
working
options.
for the client. You're working for the buyer.
Yeah,
Yep.
certainly
Find their
there's a
best
due
needs.
diligence with us with affordability, all that sort of
Yeah.
stuff as well. We're working off the bank rules.
Yes.
And certainly there's times where you sort of ask the question to the client, what can you comfortably afford? Because that's a big thing. Look at the big picture of what they can afford.
Yeah.
You don't want to put people in a situation where they can't pay it back.
Yeah.
But certainly the way the banks look at things as well is they put in a serviceability rate on top of the current loan. So where people think, well, they come to you and they say, well, I can afford it. Yeah, you can afford it. But the banks actually assess it different. So if the current rates are 5.5%, they'll assess it at 8.5%. And they're factoring in things like rate rises and stuff like that. So they want to make sure you can afford the loan as well. But that's where people, they're covering their rent fairly easy and they want to get into a house. But obviously when you look at assessment rates, it changes.
Yeah.
And that's what does make it hard at the moment. You know, I think the assessment rate's up to 9% with most lenders, which is fairly high.
That's pretty high.
And
might
then if
add-
you, on top of that, if you've got investment properties,
Yep.
they're all getting assessed at 9%, all your existing debt as well.
Yeah.
And we've already caught the rate rises from 10 raises ago.
Yeah.
So that buffer has actually been already eroded. So for people who borrowed at the 2% mark. Yes.
And those clients that have got a fixed rate
Yeah.
Oh, yeah.
Big
at the
talk at the
moment, I
moment.
mean,
Ooh, yeah.
that's. Can you? I know it's hard to put percentages on it, but that's something that obviously is going to change fairly soon. What advice and information are you giving your clients? They might have locked in at 2%, you know, for a period of time, and that's going to come to an end.
This one's going to get a little interesting.
Yeah.
And I'm testing out the policy. I don't know if you've tested this one out yet. So there's a simple refi that's come out. So we've got one that we're actually about to sort out now, where they've been in a much higher rate and they're coming out of it, but the affordability is not there. So we're about to test out the simple refi policy where they can refinance to another lender into a cheaper, because the bank's not coming to the party, so we've determined that.
Yep.
So we're about to try and refinance them to another lender that has a simple refi policy that's going to offer them the cheaper rate. That will help them out. And they're going to base it off the last 12 months. Now, this is actually going to be my first one, so this is going to be an interesting test to see how the process works, because that's a new policy. I understand the policy around it. It's quite a good idea. But it's going to be interesting. Well and truly, I don't know if you've done one yet, have you? No. So, So
see that over the next 6 to 12 months.
So it'll be interesting to see how this goes.
I guess it's good to see that there's lenders there that are being proactive in those situations. And again, that's the benefit of dealing with a broker, to find those different lenders that offer those, packages and services.
Yeah, and certainly look, and the lenders, they do want to try to make things work as well.
They don't want to see all these people going broke.
No, not at all.
They don't
want
want
the houses
exactly
up on the market.
Right. So they obviously, there's policies get brought out to adapt to things as well, I think. Yeah. It just seems to happen. And as I said, lenders don't want to see people throwing their keys.
Yeah.
It's just not what they want. So if it can be made easier, there's usually something that seems to pop up or a policy to try to fit.
Yeah.
But the fixed rates, it's going to be a bit of a concern with people coming out of their 2% and then all of a sudden going up to 5%. Obviously, that's why assessment rates are brought into things, so they can afford a jump.
Yeah.
But certainly we're starting to get the phone calls now about what to do, and hopefully we're just hoping that a lot of people have put some money away too and can afford it. I think it's just not the rates that have made things hard though. I think it's just the general cost of living.
Yeah.
Everything's gone up, food, fuel, everything. It's made it hard. It's just a bit of a double hit with everyone.
Very much so.
Where do you both see interest rates going at the moment?
About another 0.75% by the sounds of it. Three rate rises about.
Well, they're obviously talking today's going to be one.
We're going to be one of them, and maybe two more to come.
Yeah.
But it's going to be a lot of pressure on people.
Oh, definitely.
And the question is it actually going to work? Because the rate rises only affect approximately about a third of homeowners as well. So
that's not going to help. Yeah.
So there's 2/3 that won't be affected by it. So it's the hard part of it is that it's on the younger borrowers as well that have been the first ones getting into the mortgage. They've had to buy more expensive properties because that's where the market is.
Yeah.
So, and they're the ones who are under pressure, whereas we're older borrowers. So we've either got no mortgage or very, very low mortgages. You get a few rate rises, it doesn't worry us so much. Yeah. But we do understand the stresses that it has on these younger borrowers, and that's pain has been more inflicted on them than anybody else.
Yeah.
So
as agents,
there are older borrowers, but yes.
Yeah, correct. And we've seen that in the market too. I think probably a sub 500 or less, probably a little bit harder to shift at the moment because it was just what you said. The first home buyers coming in has really affected them, where 600 plus people have already sold their homes before and have made good profits over the last couple of years. And so, their mortgage amounts are either quite similar or they don't have a mortgage at all. So, they can really afford those higher properties. Yeah. So
there's a certain percentage of buyers in the market that were initially we're going to construct and build house and land, but that's really probably more an eye-opener for some, unfortunately, and that's pushed them back into that established housing market. We've seen that a lot. So that's driven that mid-range market, I think, for Shepparton and Goulburn Valley area, where your homeowner, which you feel for them, which if they can't afford to build, it's still somewhat difficult to get into your let's call a median house, which is around 435,000 now, as we sit now. So that's continually increased, even with interest rates increasing. Our median price is, people probably don't realise that actually month on month has continually increased. So that's put added pressure on our first home buy market, and we've certainly seen that very clearly. Limited. It is limited. And what we had last year, probably more if there have been investors somewhere out of Melbourne and metro area, probably come off as well. So there is a bit of stock there around that high 3s, early 4s. It is still good buying, but it is difficult for those first home buyers to just enter the market. So, some of those first homeowner grants that some of these viewers may not be aware of get in and see your broker, talk to the local guys, and you might be surprised what you can and can't do. So.
Yeah, and look, for the first homeowners as well, and existing homeowners, the last 2 or 3 years, the people that actually have got in have done quite well too.
Yeah.
So if you flip the positives over, they've bought a $500,000 house. Yeah. Potentially could be $600,000 or $700,000.
Yeah, got a bit of equity there.
So they've gained a lot of equity out of it as well. I know affordability might be a bit tougher.
Yep.
But they've certainly created a lot of equity in the short term as well. They've got to win. So there's a positive in the market for anyone that actually got in.
Definitely.
Yep.
We can do valuations whenever we want. So if someone wants to revalue their house, we can get it properly revalued. And I think they'd be shocked with what it's worth now. So they've done quite well.
Definitely.
And is that a cost? Just on that, Paul? Is there a cost involved?
No cost at all.
No
So
cost
if we've done an initial loan or a new customer wants to come in, we can get it valued. There's no cost.
No cost at all.
Easy.
Yeah, there you go. Yeah.
So not just the real estate valuation. Obviously, you can get a real estate valuation.
Yeah.
But we can get a
proper valuation.
A valuation through a value. Bank one.
Yep. See where the client sits and.
So what we can do for them.
Yeah. Yeah. And it's good to be face to face. Good to be local.
Yep.
Sit down. And work through it, which is.
And in turn, if the valuation has gone up that much, it can change your rate. Just even within your own bank, as I said earlier on, it can drop your rate.
Yeah.
Because they charge a higher rate for a 95% lend to a 80% lend.
Yeah.
Or a 70% lend that tiers down with some lenders.
Yeah.
So it's a good thing to do.
And what are the interest rates at the moment? We're looking some of the major banks. What are the major 4 banks these days? Is any change there? Or?
Well, the Commonwealth still sits at number 1.
Yep.
Followed by NAB, National Australia Bank. I'm pretty sure Macquarie's now in 3rd position now.
Yeah, right.
Followed by Westpac Bank of Melbourne, I'm pretty sure it's 4th position. And ANZ would sit in 5th at the moment.
Right.
But I think ANZ's doing a bit of gaining at the moment. So ANZ and Westpac might swap around in the next couple of months.
Yeah.
But Macquarie's definitely...
what are they doing differently to sort of get there? I mean, it's always been those standard Big 4 banks, and now you see Macquarie and Bank of Melbourne really pushing. Like, what are they doing differently to...
For Bank of Melbourne, it would be processes.
Yeah.
Valuations up front, get the information. They seem to have a very streamlined process. And their rates are competitive too. Yes. And the product doesn't shift too much as well. So if you want a basic rate, you can have their basic rate. They've got fixed rates as well, so but I'm just comparing the rate the variables for the moment. If you want an offset rate, well, their rate stays rate stays the same. You just have to pay a package fee for the offset. Whereas there's a lot of lenders that you can take your basic, but if you want to take a packaged rate or an offset rate, the actual rate goes up in price. So they've got some of the processes very, very streamlined, and their product is very clean and very easy to use. And sometimes, like the other day, I put an application in. We got the val in, pay slips in. There was one question around like a $3 deduction on the pay slip, which was, I think, the social club. They just wanted a quick answer on that one. So I sent that in by email. 15 minutes later, I actually had the formal approval.
Done.
No, it was done, basically. So the turnaround time can be as quick as 24 hours if everything's prepared.
Done, streamlined.
And this, as we're talking, this is where fact find, we collect our information, get everything up front so that we can get it in.
Yeah.
And if you talk Macquarie, they're very streamlined.
Yeah.
Got some really good rates, better rates for low, what they call LVRs, the lending value ratio. So they're really good for a basic home loan. Really good for a self-employed savvy investor. Their rates are really sharp, and they look at self-employed really well as well. So every lender's got their own niche. Look, there's some cheaper rates again than all the majors, but then sometimes there's some processing issues at the back end. Major banks or the top banks might turn things around in 2 or 3 days. It might take them 2 weeks just to give you an answer. So as long as we're honest up front with the client, tell them this is the process. If they want to refinance to them, they might get a great rate, but it might take longer to get it through. And that might just be because of their back end, might be well understaffed and their volume's that high because they're getting so many applications in because the rates are so good.
Correct.
So,
And I guess that goes back to you're dealing with around 40 lenders too. So, there's probably other lenders that you guys really have good relationships with or, have good processes and streamlines that aren't necessarily in the top 6 as well.
Yeah.
So,
And there's certainly lenders that'll push things through quicker for you.
yeah.
Everything that we do is disclosed up front. So we tell everyone how we work.
Yeah.
There's no cost to the client to use us.
We haven't disclosed our commission what we'd receive.
Yeah, full commission disclosure.
The whole works.
Yeah.
Doesn't affect rates or fees or anything like that.
No.
All right, so we're working for the client.
Yeah. Yeah.
So to give you an idea, finance brokers Australia-wide, I think it was just updated, we're writing 71% of all home loans Australia-wide. So that's gradually increasing,
Yeah.
and it will continue to increase. So as branches
definitely.
slow down, start to shut down, and you're noticing branches even in Shepparton as
Yes.
well.
Yep.
Bank of Melbourne, just in the malls, just closed down.
Yeah,
This
okay.
is happening all across Australia.
Yep.
So people are looking for different avenues to get their home loan. And the broker is definitely probably the best tool you'll have to go get your home loan.
Yeah.
Yeah. Fantastic.
And certainly I've had cases where, yes, we use so many lenders, but sometimes we just can't do the deal. All right, but we may know of a bank that might do it. And certainly I'd be happy to direct that person to that particular lender.
You don't
We don't write it directly sometimes,
Yep.
but certainly it's in the best interest
Lead
of
them
the
in the right
clients
direction.
to achieve what they want to achieve.
Yeah.
If I can't help them,
Yep.
I can certainly help them get there. Yeah.
Very good.
I was going to touch on equity a little bit as well, because we're talking about first home buyers. But talking about equity, obviously the last couple of years we've had large capital growth. So not just for the first home buyers, there's the family guarantee. That's quite important as well, because you're going to find first home buyers sometimes underpaying rent, cost of living. As much as they try their hardest to save their 5% deposit, sometimes it's just not achievable. So, especially with the increases in values of property, you'll find mums and dads, we'll turn down the mums and dads bank of mum and dad, I should say, they're going to have that equity in their property. So there might be an opportunity for a first home buyer that might not have quite the savings, but has the capacity, has been paying the rent and doing all the right things to be able to get a family guarantee to get into the home.
Yeah.
But that's not just for the first home buyers. I've had many incidents where, unfortunately, a result of COVID, there's been quite a number of separations as well.
Yep.
Where one of the partners has been left pretty low in funds, but wants to still get in the home, and they might be still in their 30s or 40s, but the family guarantees come in very, very handy. So it's not just limited to the first home buyers. It's
right.
So that capital growth might be a good opportunity for first home buyers to be providing. Parents are happy to use the family home.
Yeah.
To get them into a house, basically.
Yeah, it's not all doom and gloom for first. There's definitely
there's ways.
There's ways to get things done.
Correct.
It's just going to a broker and discussing that and finding what best option suits them.
Yep.
Get the information, the free chat, and that's great.
Yep.
That's
Exactly.
Great. Yep. Guys, anything else would like to touch on? There's one thing that I probably want to touch on also was self-employed clients. We deal with so many self-employed. Just the criteria for self-employed. It's always, it used to be you need your last 2 years of, bank statements,
Bank to bank.
tax returns and so forth. Is there any?
Bank to bank, you'd say the standard policy that they want is 2 years financials.
Yeah.
But there's certain lenders that are happy to look at 1 year's financials.
Yeah.
There's certain lenders that are happy just to get notice of assessments and don't even have to look at financials.
Yeah, right.
So it's fairly broad with what they want to see. There's some lenders that if you're in a certain industry for so long, particularly like tradies that are in their trade for so long, they want to go out on their own.
Yeah.
Certain lenders that'll look at that and say, okay, if you can give us BAS statements, if the income's consistent, we'll look at it.
Yeah.
It depends on, and then it depends if they've got a bigger deposit and
Correct.
The banks,
Yeah.
there's less risk.
Yep.
Yeah.
If they've got a 20% deposit to a 5% deposit. So there are certain policies between different banks that do it. Generally, you'd say 2 years.
Generally 2 years.
But
But they will accept one as well.
yes.
Yeah, okay.
But there's also the PAYG policy as well. If they're actually paying themselves a salary and it's correctly lodged and they're using the simple payroll system, single touch payroll system, and they'll get an updated year-to-date PAYG summary off MyGov.
Yep.
And if that all adds up, then depending on the time of the year, some want 6 months to have been credited. You can use that and you don't have to worry about the actual tax returns.
Yep.
So it does vary, but that takes a bit of planning as well.
Yeah.
So if that's the case, they don't worry about any of the business debt, nothing.
Yeah.
Yeah.
They're just happy to use the payroll and that's it.
Interesting.
Yeah.
But there's
It
always
is.
there's a way. It's just sometimes it may not be right now.
Yeah.
We'll say, well, if you do this,
Yeah.
then we can look at you in 3 or 6 months' time.
Yeah.
And that's, as I said, this is the advantage of coming to a broker.
That's
Correct.
right.
You could walk into a bank and they just say no because that just doesn't fit our policy, and you
Yeah.
think
Yeah.
that's it,
Yeah.
basically. Where we'll go, you're not going to be here, but we'll definitely should be able to place you here. We just need to do a bit of prep work for you.
And certainly now's the time, if self-employed are looking to do finance,
Yep.
go see your accountant now before you do this year's financials. Like
Yeah.
it's March now, we're only 3 months away, June.
right.
Yep.
Start reviewing it all now.
Yep.
And getting it set up right
Yeah.
to borrow for finance.
Yeah. Yeah.
We see so many self-employed clients coming in. It's always extra discussion about financial side of things, deposit and different criteria. So I think that's important for some of our viewers to acknowledge and understand.
Yep.
It's very broad, and
Yeah.
a lot of lenders have got certain policies that really fit really well.
Yep. Yep.
It's great.
What are you both seeing in the construction side of things, from construction loans, especially more for, let's talk Shepparton, regional. What are you seeing?
If you said asked that question about a year and a half ago,
Crazy.
crazy.
Yeah.
Yep.
Yeah.
Just
Yeah.
constant. If you ask that question right now,
Yeah.
slowed considerably.
Yeah.
Yeah. That reflects the
Yeah.
market as well with land sales.
And I think the other thing is as well, I think people have been waiting for contracts for a while.
Yeah.
Or some of the land wasn't released really quick.
Yeah, it's
So the
like waiting for
contract prices that
titles.
they initially got quoted might have been 400,000. Now it's 500.
Yeah, that's the
Yep.
biggest
So
issue.
I think
yeah.
people are just now, okay, can I really do this?
Yeah.
Which is good if they're thinking about that in a way.
Yeah.
But I think that's slowed it all down.
Yep. And we're having to do a little bit more education around the contracts as well for the clients to understand that a fixed price contract is not necessarily a fixed price contract.
Yes.
So there can be post variations that they've got to be prepared for.
Yeah.
So a lot of the times we'll just explain to the client, just keep saving. I know you got
Yeah.
that's the fixed price contract, but we don't want to get to the end and there's a $4,000 or $5,000 variation that you have
Yeah.
to come up with.
Yeah.
Because it was a surprise, or they needed to put an extra gutter in because it was going to drain property, and all of a sudden you've got extra dollars that you've got to fork out. And
Site costs and things like that, there's extra
Yep.
fuel. And then now with the builders, they're going to bring in June or July. There's more standards within
the developer's tax.
and so now they've got to do wider hallways. It's all got to be double glazed. So there's an extra 20 or 30 grand that's going to come through in the next sort of 6 to 12 months as well, that people probably need to be aware of as well. Within the building regulations have brought in new things that they need to bring in. So
But there is building happening. We're seeing from the normal, I wouldn't say now cheap contracts around $350,000 for a house, for a smaller house, and now we're starting to go into the $1 million construction
Correct.
loans.
Yeah.
So
yeah, it's the same as the housing market to a degree.
it's just lifted in
Yeah.
price.
Yeah.
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 Yeah, the first home buyers or investors aren't really building, but it's more the second, third home buyers
Correct,
that
yeah.
are
Just-
upgrading and building some nice homes. Yeah.
Yeah. Well, they've had equity.
100%.
Yep.
Yeah.
They've had equity, and they're somewhat comfortable.
Correct.
Very
in their
comfortable.
lifestyle. So, and that's evident. So, that's the importance of this information today certainly for some of these like first home buyers or second tier buyers to get in for that free chat, know what's available, know the government incentives. You'd be stupid not to come in for a chat.
100%.
And just have a chat, know where you're at. Not everyone. The market is so. How do you say it? As agents, when you talk to a lot of clients, a lot of purchasers, a lot of vendors, it's the market's changed, the market's dropped, so it's a lot of conditioning going on as agents, and not just it'd be agents in general conditioning potential clients and vendors. So that's just a reflection of, again, coming in, having a chat with your broker, understanding what's available. I think that's really important. That's what today's about. On top of the landscape's changed a bit, and it looks like it's going to be changing a little bit more potentially. Firstly, guys, we want to basically thank you both for coming in.
No problem.
It's been a wealth of knowledge and information to our viewers. Paul and Simon, for you guys, thank you.
No problem.
And viewers, anyone needs to get in to see a broker, pop in and see Paul at the Brokerhouse or Simon at GV Finance Brokers. They're local people, have been in the game a long time. So thanks for watching. Thanks for joining us, guys. And we'll see you again soon.
Thanks for listening. Please subscribe on your favourite podcast platform so you don't miss upcoming episodes. We would love you to share this podcast with your network, and if you have any questions or feedback, please connect with us via our social network or head to gagliardiscott.com.au.